On August 5, 2024, the Vix, a key measure of S&P 500 implied volatility, experienced a historic spike, soaring 180%, the biggest one-day spike in its 30-year history. Large spikes in the Vix often coincide with market sell-offs, and they can indicate that a buying opportunity is near. For example, on that same day, the S&P 500 had a sharp pullback before making new highs on September 19. Therefore, if someone bought the S&P 500 on August 6, 2024, they would now have 37% of profit. However, to analyze Vix's moves, it's important to look at the long-term trend, especially when trying to predict if a stock market crash is near. So, in this video, I will present to you an alternative approach to Vix analysis focusing not just on the magnitude of spikes, but on what Vix is telling us from a long-term perspective. Vix's long-term trends are very important, because if you are not aware of what Vix is saying, you could get yourself off guard selling and buying at the wrong time. For example, many traders bought at the top of the 2021 stock market because they could not understand what Vix was saying. As you can see, there was a Vix uptrend ongoing before the S&P 500 started a downtrend. One-day spike is not enough to understand a Vix signal. It is necessary to analyze the whole context and find out the longer trend. As we start to understand Vix signals, we may start to take advantage when it is a buying opportunity or consider selling our stocks when Vix is showing long-term signals that the market is ready for another stock market crash. Later on, I will compare the latest Vix trend to the one that happened in March 2007, 7 months before the stock market crash. Therefore, consider hitting the like button and staying until the end because this will be a golden egg for traders and investors like you. Now, let's dive in. After Vix's latest spike, many analysts are talking about the magnitude of the one-day spike, but I do not see any of them talking about the long-term breakout. When analyzing Vix, it is more important to see the long-term trend than the size of a spike. Therefore, let me explain how Vix's recent breakout happened. This is the long-term 2024 downtrend that started in February 2020. Even if sometimes Vix goes above the white line, does not hold and goes back down again. But, since the August 5th spike, Vix seems to be behaving differently because it is holding on a support level, forming a new uptrend. If this uptrend keeps creating higher highs, the reversal will be confirmed, and this could be a huge signal, similar to the one that happened in March 2007, because it happened exactly 9 months before the 2008 stock market crash. Now let me show you how Vix 2007 breakout is very similar to the recent 2024 Vix breakout. This is the most recent long-term downtrend of Vix, and at the end you can see a clear breakout and the start of an uptrend. Now, let's go back to 2001. As you can see, this is when the downtrend started, and stayed strong until March 2007 when the breakout happened, and started a new uptrend. Then, Vix started to make new highs in March 2007, and formed an uptrend that increased until October 2007 when the S&P 500 peaked at an all-time high. So, if this time, the stock market behaves the same way, the breakout happens months before its top. In this case, as you can see, Vix's breakout happened 7 months before the stock market peaked, and from there, started to crash. So, the $1 million question is, how to spot a meaningful VIX breakout and use this signal to find out what VIX is saying about investors' sentiment since it measures the fear. And also try to find out what their reaction would be, and use that information to position yourself ahead from what is going to happen, including a sudden stock market crash. For example, VIX had a reversal confirmed on March 2007, and that was 7 months before the S&P 500 peaked, on October 2007. Also, as you can see, it was 12 months before the end of the first wave of the S&P 500 crash, in March 2008. And also, 24 months before the end of the stock market crash, in March 2009. The most important principle is to have a long-term perspective when trying to understand VIX signals, because it is a very complex indicator, and also because traders many times get themselves at the wrong side of the table, trying to time the market. Stay tuned until the end. We will go over all the details on how to do that. Now let's go deeper into the recent VIX breakout. If we go back to February 2020, there is a clear long-term downtrend, and after many attempts, VIX finally broke out of the downtrend and is signaling that a reversal is on the way. Therefore, we need to watch it closely, because if this trend continues, it could mean that the reversal is confirmed and that something similar to 2007 is on the horizon. Now, let's compare the recent move to the VIX 2007 breakout. Here we are on the VIX daily chart and it is March 2007. As you can see, VIX just broke out above the white trend line and started to trend up. If we go back to 2001, we can also see a long-term downtrend, followed by the white trend line, and every time VIX tried to go above it, would not hold. For instance, in May 2006, VIX broke out the trend line, but could not hold above it. But in February 2007, VIX had another attempt, and this time, as it started to hold above the white trend line, a new uptrend was created. Now let's analyze the VIX trend combined with the S&P 500 as a pink line. As you can see, after VIX started a strong uptrend, volatility started to get stronger inside S&P, with the first huge pullback in July 2007, but that was not its peak yet. Only 3 months later, we find the S&P peak in October 2007. After that, the S&P lost its breath and started the first wave of the crash, which lasted until March 2008. The second wave down started on May 2008, after a small retrace, and kept going until March 2009, dropping around 56% from the peak at 1554. Just a moment, please. We have no sponsor, and I am sharing all this top information for free, so please support us with the like button. Also, as the S&P was reaching the bottom, VIX was reaching levels not seen from decades, and one of its record high, and increased the volume of its swing. Another interesting fact is the inverse correlation between VIX and the S&P 500. Clearly, as the blue line goes up, the pink goes down or vice versa. Now, we can understand that a single spike does not mean anything, and what we really want to look for is a VIX breakout from a long downtrend. But we also found out that even a long-term breakout does not mean it is time to sell, because, in that case, the S&P only peaked 7 months after the breakout. For instance, on August 2007, there was a nice opportunity to buy, when VIX was moving up, and the S&P was on a pullback, before making new highs, in October 2007, when it peaked. That is why it is not so easy to understand VIX as an indicator, because, sometimes, it can indicate an opportunity to buy, and other times, can indicate that it is time to sell, because of a looming stock market crash. we can see that most important VIX's signals are the ones that come from a long-term perspective. And if we take advantage from what VIX is telling us, we can predict what is going to happen in the stock market using the inverse correlation. In summary, VIX's last breakout, after the August 2024 spike, seems to be different from the previous ones since the last downtrend started in February 2020. VIX is now showing signs of a reversal, forming a new uptrend similar to the one from March 2007. Therefore, it is vital for traders and investors to keep track to VIX's new uptrend and be aware of what could happen to the stock market in the months ahead. Some analysts say that VIX spikes lead to V-bottoms as in 1997 and 2021, as double bottoms in 1998 and 2011 and 2015, as head and shoulders bottoms in 2002, 2008 and 2010, and a triangle in 2018. But these spikes are actually long-term moves, not a one-day spike, like the one on August 5, 2024. When VIX on a long-term perspective starts a new uptrend, that means fear is spreading among investors. But that can also lead to volatility in the stock market, as speculators try to take advantage, and this is why we cannot rely on independent VIX moves when trying to find out when is the perfect date to buy or sell. Actually, we will never know when is going to be the best moment to sell. There could always be more speculators hiding and waiting to try to move the market and make money from a sudden swing. VIX indicator only gives us the level of fear from investors and traders in the stock market and will never tell us the perfect date to buy or sell, but if we learn to understand and combine its signals with other instruments, it might help us understand the current situation, as far as speculation breadth and the level of risks that the stock market is carrying. On one side, it can help us visualize the stock market volatility level and give us the choice to not deal with some type of swing and risk. Even if someone thinks that any indicator could give perfect signals to buy or sell, I do not recommend that you try to time the market, because you could get yourself stuck on the wrong side of the table, hanging the bag alone. The stock market is always changing and never behaves at the same exact way. Being a successful trader is not about predicting the day it will happen, but finding out when is the best time to stay and to leave with a safety edge. The financial crisis from 2007 led to high volatility periods in the stock market, and the S&P 500 lost about 56% of its value from its October 2007 peak to March 2009, and the VIX index more than tripled. Those who were playing, at the time, certainly got caught, at some point, on the wrong side of the table, because with casino behavior, the only chance to win you get is from a casino probability, and to invest in the stock market, in a long-term perspective is very different from that. So, beware of what is happening to VIX, and stay tuned for more. And don't forget to subscribe. Good luck and good profit. Also, don't forget to share this experience and knowledge. Let's grow this investor channel together.